Downside in focus, how much lower could we go on the various different scenarios here? You know, I'm always confused when people talk about binary risk in sterling, Jeremy, because to me this is anything but binary.
No, absolutely. You're certainly, as it stands now, talking about downside risks which far outweigh the topside risk, because as it stands at the moment, we don't look as though we're going to suddenly have a resolution which could encourage sterling to really rally higher. So, in a sense, I think in the short term, if we break down through that sort of 125 area with any conviction again, then I think the obvious level we start to look for is around 123.5. So that's the sort of level that we could easily find ourselves trading into the early part of next week if we are once again seeing markets thinking the risks of a no deal are starting to become amplified, or at least continued political inertia going into the Christmas recess. And of course, we're also seeing the European Union now stepping up their preparations for no deal, and those will be detailed next week. And it may well be the case that the realisation hits home that the European Union's contingency planning is rather better than the UK's, and that also underlines further pressure points for sterling.
Yeah, and meanwhile, euro sterling not really moving. We're on an 89 handle, but I'm sure some of that has to do with the euro weakness we're seeing.
Well, indeed, when you look at euro dollar, yes, absolutely. That's the one reason why euro sterling hasn't really exploded higher at this point.